Bitcoin has been one of the best performing asset classes in recent years. As of the time of recording this video, each Bitcoin is worth $107,000, representing a tenfold increase versus 5 years ago. The coin's market capitalization sits at a little over $2 trillion. Publicly traded companies are increasingly opting to hold Bitcoin on their balance sheets. The largest example of this is MicroStrategy, which has been buying Bitcoin since 2020. MicroStrategy started off as a software company, but now their main focus is accumulating as much Bitcoin as possible. They even changed their name to Strategy B to better align with their new mission. They currently own 580,000 Bitcoins, representing approximately 3% of the outstanding supply. MicroStrategy's pivot to a Bitcoin company created massive hype from speculative investors, pushing its stock price far above its net asset value. The company has taken advantage of this to raise tens of billions of dollars from the public markets to acquire more Bitcoin. In the world of business, success invariably breeds copycats. On May 27, 2025, the parent company of Trump's Truth Social announced plans to raise $2.5 billion for the sole purpose of acquiring Bitcoin. As GameStop's core business continues to decline, they too have announced a Bitcoin strategy. Like any asset, the price of Bitcoin is determined by supply and demand. If more and more publicly traded companies start buying Bitcoin, this could create a self-fulfilling prophecy whereby this buying pressure pushes up the price in and of itself. In this video, we'll analyze the growing trend of publicly traded companies buying Bitcoin, and what this could mean for the coin's price in the long term. To understand how much impact public companies can have on Bitcoin, we first need to understand how many Bitcoins there are. The maximum supply of Bitcoins is 21 million, of which 19.9 million have been mined to date. However, not all these Bitcoins are available for the general public to trade. Approximately 1.1 million Bitcoins are locked away in wallets believed to be controlled by the coin's anonymous founder Satoshi Nakamoto. Many Bitcoins were lost in the early days when they were not very valuable. For example, in 2013, a British man named James Howells accidentally threw away a hard drive containing the keys to 8,000 Bitcoins. This would be worth more than $800 million today. Due to Bitcoin's decentralized nature, it is very difficult to estimate how many Bitcoins have been lost in this manner. Various blockchain analytics firms have made estimates ranging from 2.3 to 3.7 million, so we'll just take the midpoint of 3 million. Many other Bitcoins are owned by so-called hodlers. Hodl means hold on for dear life. Many members of the Bitcoin community have a nearly religious devotion to the coin and vow never to sell their holdings, at least not for the foreseeable future. The number of hodlers is very difficult to estimate. Many bulls point to the fact that the majority of Bitcoins haven't been moved in more than a year. They use this to argue that most Bitcoin is held by hodlers who have no intention to sell. However, this is a misinterpretation. Much of this seemingly dormant Bitcoin is owned by centralized exchanges such as Coinbase. They hold large amounts of Bitcoin on behalf of their clients in cold storage. When people buy and sell Bitcoin to each other on centralized exchanges, this is recorded as an internal ledger transfer. The Bitcoin never actually leaves cold storage, so the transactions are not visible to blockchain analytics. Bitcoin that appears to be dormant for many years may actually be facilitating billions of dollars of trades off-chain. The good news is we can get a pretty good idea of where the world's Bitcoin is held based on publicly available data. The most detailed breakdown I could find comes from a website called Time Chain Index, which has found and categorized wallets holding almost 10 million Bitcoins. The single largest holders of Bitcoin are centralized exchanges. Think Coinbase, Binance, Kraken, etc., which collectively hold 3.5 million Bitcoins. The second is lost keys such as James Howells' lost hard drive. Remember, this 3 million is just a very rough estimate. Bitcoin ETFs own 1.3 million Bitcoins. This is a relatively new phenomenon, as these ETFs were only approved in the US last year. 1.1 million are held in wallets believed to be controlled by Satoshi Nakamoto. 900,000 are owned by Bitcoin mining companies. Miners earn newly minted Bitcoins as block rewards. They usually sell their Bitcoins to reinvest into their mining operations, but sometimes they hold onto them on their balance sheets. 800,000 are in wallets believed to be held by individuals, even if we don't know who those individuals are. For example, 80,000 Bitcoins are held in a wallet believed to be controlled by whoever hacked the Mt. Gox Bitcoin exchange in the early 2010s. The Bitcoin has remained dormant in this wallet, likely because the hacker fears he could be exposed if he moves it. 700,000 Bitcoins are owned by companies, the largest of which is MicroStrategy, but there are others as well. 450,000 are held by custodians. These are entities including Coinbase Prime Custody. They hold Bitcoins on behalf of institutional investors for safekeeping, but they're technically not on the exchange, so they're in their own category. 280,000 are owned by governments, mostly the US and Chinese governments. These Bitcoins were seized from criminal organizations such as the Silk Road. 195,000 are held in contract wallets. These are various decentralized protocols that Bitcoin is deposited into. 150,000 are held in over-the-counter exchanges, and some are also deposited into decentralized staking or lending protocols. All of these categories together add up to 12.5 million Bitcoins, or almost 2/3 of the Bitcoins that have been mined. The remainder may be held by foreign exchanges we don't have data for, unknown individuals, and criminal organizations. It's also possible that we've underestimated the number of Bitcoins held in lost wallets. For now, let's just focus on the Bitcoins we have been able to identify. The main focus of this video is the Bitcoins owned by companies such as MicroStrategy. They currently own 710,000 Bitcoins, or 5.7% of the located supply. But to understand the impact on Bitcoin price, we have to narrow our focus to only the Bitcoins that are available for trading. The Bitcoins held in lost wallets, Satoshi Nakamoto's wallets, individuals, governments, and DeFi protocols are not being actively traded. Excluding these, the free float of available Bitcoins is only 7 million, so the number of Bitcoins owned by companies is approximately 10% of the free float. This is significant. The buying pressure from MicroStrategy and others may indeed have contributed significantly to the price appreciation Bitcoin has experienced over the past few years. Excluding Bitcoin miners, the publicly traded companies that own the largest amount of Bitcoin are MicroStrategy, Tesla, Block, Metaplanet, and Nexon. Block is the company that makes the Square payment terminal. Nexon is a Japanese video game company that makes games including MapleStory. Metaplanet was until recently a penny stock listed on the Tokyo Stock Exchange. With 580,000 Bitcoins, MicroStrategy has the largest holdings by far. Nobody else even comes close. Tesla, Block, and Nexon all have large core businesses, and their Bitcoin holdings are too small to matter. For example, let's look at the Japanese video game company Nexon. Their market capitalization is equivalent to approximately $15 billion and their annual revenue is approximately $3 billion. At current prices, the value of their Bitcoin holdings is approximately $180 million, just 1% of their market cap. Nexon made its first and only Bitcoin purchase on April 27, 2021. The announcement of the Bitcoin purchase coincided with the company giving a disappointing profit forecast. Perhaps the Bitcoin announcement was designed to distract attention from the poor performance of their core business. Investors were not impressed, and Nexon's share price fell by 50% over the next few months. Nexon's stock price has recovered since then, but that is because their core video game business returned to growth. Their Bitcoin holdings have not helped them at all. The point is, if a large company makes a small Bitcoin purchase, this will be viewed by investors at best with indifference and at worst with contempt. That's why we haven't seen very many large companies buy Bitcoin. The major exceptions are Tesla and Block, but their decisions to acquire Bitcoin can be attributed more to the eccentricities of their CEOs, rather than a sound business strategy. The more interesting of these companies is Metaplanet. Prior to announcing its Bitcoin strategy, Metaplanet was a tiny investment company in Japan, with its shares listed on the Tokyo Stock Exchange. As far as I can tell, their only significant asset was a single hotel in Tokyo called the Royal Oak. In the third quarter of 2024, they generated revenue equivalent to about $600,000 and reported a net loss of $1 million. Their share price was 100 yen, giving them a market capitalization of about 19 billion yen. This is equivalent to about $130 million. They also had about 2 billion yen of cash on hand, equivalent to about $14 million. So this was a penny stock company that owned one small hotel and had a little bit of cash. In December of 2024, they used about half their cash to buy Bitcoins. They didn't have very much cash to begin with, so they only bought a small number of Bitcoins. But by announcing the Bitcoin strategy, they were able to generate interest from speculative investors. Because the market capitalization was so small to begin with, this buying pressure pushed up the stock price significantly. They proceeded to raise hundreds of millions of dollars by issuing new shares. To further promote their stock, they hired a guy called Dylan LeClaire to be their director of Bitcoin strategy. LeClaire previously worked for Bitcoin magazine. His main job appears to be going to various Bitcoin events and conferences to promote Metaplanet's stock. They're following the exact same playbook as MicroStrategy. Generate as much hype as possible, push your stock price up as high as possible, and raise as much capital as possible to buy as many Bitcoins as possible. Metaplanet has successfully established itself as a pure Bitcoin company. Nobody cares about their Royal Oak Hotel in Tokyo. As Metaplanet's share count and share price have both risen, their market capitalization has exploded to 730 billion yen, equivalent to about $5 billion. At current market prices, their Bitcoin holdings are only worth about $830 million. Just like MicroStrategy, they have successfully leveraged investor hype to pump up their share price far in excess of their net asset value. So why are some investors willing to buy shares of companies like MicroStrategy and Metaplanet despite their apparent overvaluation? It really boils down to the greater fool theory. They hope that as these companies acquire more bitcoins, this will create more hype, allowing them to issue even more shares to new investors at even higher valuations. The problem with greater fool investing is that sometimes you end up being the greatest fool. The Trump Media and Technology Group, or TMTG, is the parent company of Trump's Truth Social app. TMTG went public last year by merging with a SPAC. Thus far, Truth Social has been a commercial failure. In the first quarter of 2025, TMTG reported a minuscule $820,000 of revenue and incurred an operating loss of $40 million. On May 27th, they announced a plan to raise $2.5 billion to acquire Bitcoin. After a very brief pump, the stock declined more than 20%. Given the unfavorable stock price reaction, it is unlikely that TMTG will announce another Bitcoin-related capital raise in the near future. Of the MicroStrategy copycats, the only one that can really be called a success is Metaplanet, and at least for now, they're on a relatively small scale, having purchased about $800 million of Bitcoin. This is dwarfed by MicroStrategy, which now owns more than $60 billion worth of Bitcoin. So how much more Bitcoin can MicroStrategy buy? MicroStrategy first started buying Bitcoin in August of 2020. At first, their purchases were relatively slow. It took them 3.5 years to get 200,000 Bitcoins. As their stock price rose, they became more confident. They started raising capital in larger and larger tranches. In the past year, MicroStrategy acquired 366,000 Bitcoins, almost double what they purchased in their first 3 years. What really sets MicroStrategy apart from the copycats is the star power of its founder and chairman, Michael Saylor. Within the Bitcoin community, he is viewed like a rock star. This creates increased demand for MicroStrategy's stock. The company currently has a market capitalization in excess of $100 billion. They can certainly raise tens of billions of dollars in additional capital over the coming years to acquire even more Bitcoin. This will add upwards pressure to Bitcoin's trading price. But this begs the question, what's the end game? Normally, when a company raises money from the capital markets, the intention is for the investors to eventually be paid back. The company might use the proceeds to build a factory or some other type of business operation that will eventually make profits. The profits will be returned to investors in the form of dividends or stock buybacks. MicroStrategy, on the other hand, has no intention of ever returning capital to investors. Their intention is to continue consuming investor capital forever. The company's valuation is not supported by any expectation of future profit. It's supported purely by the greater fool theory, the idea that you can sell your shares to someone else in the future at a higher price. Greater fool investments can last a long time, but they can't last forever, because it always ends up with the greatest fool. MicroStrategy and its copycats have undoubtedly played an important role in pumping the Bitcoin price as high as it is today. But what will happen once the bubble pops and these companies see their market caps fall below the value of their Bitcoin holdings? They'll start dumping their Bitcoins, and the price will collapse like a house of cards. Alright guys, that wraps it up for this video. What do you think about public companies buying Bitcoin? Let us know in the comments section below. As always, thank you so much for watching, and we'll see you in the next one. Wall Street Millennial, signing out.